Mauritius is an island country in the Indian Ocean, located off the eastern coast of Africa. Psychographically, it is part of the Mascarene Islands, and the capital of Mauritius is Port Louis. Approximately two-thirds of the population is an Indo-Pakistani origin, most of whom are descendants of indentured laborers who were employed in the sugar industry during the 19th and early 20th centuries. Despite being the official language, only a very small percentage of individuals speak English. The majority of people in the country speak Creole, a French-based patois, which is also the lingua franca of the country. Besides, Mauritius is famous for the dodo, a multicultural population, and incredibly expensive resorts, which is up to $600 a night.
History of Mauritius currency. In 1876, the rupee was adopted as the official currency of Mauritius. The Mauritius government chose the rupee primarily because to the country's significant flow of Indian rupees as a result of immigration from India. The rupiah circulated in the country for some time. The Mauritius rupee, which replaced the Mauritian dollar, the Indian rupee and the pound sterling, entered circulation in 1877. The exchange rate for this replacement was 1:1 for Mauritius rupee and 1:1 for Indian rupee. At that time, 10.25 rupees were equal to 1 pound sterling.
Let's move to what is the major import and major export of Mauritius. Major import of Mauritius are electrical equipment, pharmaceutical, mineral fuels, and machinery. They mainly import most of the items from China, India, and United States. While for major export of Mauritius, they mainly export items to South Africa, France, United Kingdom, and Madagascar. They major import items that consist of germs, sugar, fish, and knit and crochet. Next, we move the theoretical literature. The percentage change in local currency import prices related to a 1% change in the exchange rate between the exporting and importing countries is known as the exchange rate pass-through, Goldberg and Knitter 1996. The primary objective of the study, according to McCarthy 2000, is to evaluate the extent and degree of exchange rate pass-through at various points throughout the distribution change, import prices, producer prices, and consumer prices. The study also focuses on whether to what extent the exchange rate and domestic prices are causally related. Finally, we are evaluating the significance of exchange rate of Mauritian economy. The structure of the economy, the degree of commodity diversification, and the underlying country-specific features all influence the type of exchange rate shocks. Asymmetric shocks are more common in nations with differing production and economic system than they are in countries with similar economic and production structure. Market structure is one of the microeconomic elements that affects exchange rate pass-through, Domsburg 1987, Menon 1996, as the proportion of foreign businesses and the ratio of their marginal cost to their selling price determine how responsive prices are to exchange rate movement.
The factors that affect the Mauritius exchange rate against US dollar include export and import of goods and services, inflation, and GDP growth. For the export, it shows a significant and positive relationship between the rupee and the US dollar. Mauritius, as a sugar exporting country, has witnessed a very considerable nominal devaluation of its local currency. Moving on, when a country's exchange rate increases relative to another country, the price of its goods and services increase. Therefore, imports are less expensive. Ultimately, this can result in a decline in exports and an increase in imports. The main cause of inflation is the erosion of real income, which occurs when prices rise unevenly and cause consumers' purchasing power to decline. It is a crucial indicator since it will have an impact on the Mauritius economy. High interest rate and low inflation can entice foreign capital into the nation, which strengthens its exchange rate. Due to the local currency devaluation, this component indicates a little positive relationship between the rupee and the US dollar. Meanwhile, the increases in the real GDP of the United States will boost the flow of dollar to other nations, which will result in a decline in the value of the dollar. Hence, the improvement in Mauritius' economic performance will have a positive impact on the rupee.
Moving forward, let's look at Mauritius' descriptive statistics for the 30 years. Here are some statistics on the factor influencing Mauritius' exchange rate. The most popular and best way to measure central tendency is through the mean. The highest average for import of goods and services is seen, whereas the lowest average for GDP growth. A high standard deviation of 6.9305 suggests that the data is dispersed and untrustworthy, whereas a low standard deviation of 2.5481 indicates that the data are tightly clustered around the mean, which is more relevant. Inflation indicates that the collected data is roughly where the model expected it will be, since it has a lowest variation. Inflation skewness value is recorded 0.2983, which means between -1 and +1 is considered excellent. A positive value of currencies is indicate a distribution more peak than normal.
For the correlations, it can be interpreted that the correlation of exports, import, inflation, and GDP growth shows a perfect margin, and the number indicates a positive linear relationship since the value is 1. However, the association between all of these factors against the exchange rate is unfavorable since the value against exchange rate show a negative result.
Next, we proceed to multiple regression. The value of R squared is 0.544. Approximately, it shows that it is 54.4% of the exchange rate of Mauritius rupee. It is explained by the export of goods and services, imports of goods and services, inflation, consumer prices, and products Mauritius. While for the value of adjusted R squared is equal to 0.472, or also known as 47.2%. It shows the variation of exchange rate variability. The dependent variables are well explained by the independent variables. Next is coefficient. The value of this data shows that the export and goods and services has a positive significant impact on the exchange rate. The null hypothesis is accepted. While for the other hypotheses such as imports of goods and services, inflation, consumer price, and GDP growth are insignificant, the null hypothesis is rejected. Last but not least is ANOVA. The p-value for the f-test is equal to 0.0041, which is less than the level of significance of 0.05. Therefore, the null hypothesis is successfully accepted. The export and goods and services is statistically significant in explaining variation of exchange rate of Mauritius rupee.
To be concluded, export of goods and services is significant to the rupee Mauritius against US dollar. Meanwhile, import of goods and services, inflation in consumer prices, and GDP growth are insignificant. Besides, in correlation analysis, all the factors are negatively correlated to Mauritius exchange rate.